This week, we introduce a new quarterly segment to discuss the money of security. In the leadership and communication segment, really successful people say no to almost everything. Your gut instinct is usually wrong, and virtual assistants on the rise in the workplace, and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Do you have a website, an external presence, employees, an office? Any of these things can be compromised and attacked. How are you defending your assets? Have you penetration tested your public assets? Start 2018 by taking a proactive approach to securing your vulnerable areas. Black Hills Information Security has been helping companies find their weaknesses since 2008. Email consulting at blackhillsinfosec.com and see how they can help you sleep better at night. The modern attack surface is vast and permeable, extending from the data center to the cloud and device edge. Security teams are stretched thinner and thinner as they try to cover this ground. The result? More high-profile breaches hit the news every day. Don't let your organization be next. ExtraHop delivers security from the inside out, helping enterprise security teams detect threats up to 95% faster and cut staff time to resolve by 2/3 or more. Act with confidence. Learn more at extrahop.com/securityweekly.
Welcome to Business Security Weekly. This is episode number 113, recorded January 14th, 2019. I am your host, Matt Alderman, here in Colorado, joined by my co-host, Paul Asadorian, in G-Unit Studio in Rhode Island. Welcome, Paul.
Hey, thanks, Matt. Good to be here.
Any snow in Rhode Island?
A couple of flurries. Nothing, no big snowstorms, knock on wood yet.
You missed the big storm. I got like 9 inches on Friday through Saturday, and it was coming your way, but I guess it missed you.
It did, thankfully.
Yes. All right. If you're interested in quality over quantity and having meaningful conversations instead of just a badge scan, join us April 1st through 3rd at Disney's Contemporary Resort for InfoSec World 2019, where you can connect and network with like-minded individuals in search of actionable information. Visit infosecworld.misty.com/security-weekly and use the registration code OS19-SecWeek for 15% off the main conference or World Pass. We have a number of interviews scheduled with confirmed speakers across all of our shows, so tune in to learn more about the topics that will be covered at the conference. Also, check out our on-demand material. Some of our previously recorded webcasts are now available on demand at securityweekly.com/on-demand. All right, so let's get into this. This is a new segment. It's a segment we started talking about at Black Hat last year. Doug White, Paul, and I were talking about, why don't we do kind of a security money segment? Talk about different investments, the public market. And so we threw around some ideas, and I thought, this is a great week. We didn't have any interviews scheduled, so let's do an initial show and see how it goes and get some feedback from the audience, and we'll have some fun with it. So let me start with a little bit of background. The first thing I did was I wanted to understand how to track the security market, not the Nasdaq. The Nasdaq's got a lot of tech companies in it, and it kind of hides a little bit about our industry, the security industry, because it's kind of embedded within the Nasdaq. So looking at something like the Nasdaq index, for example, isn't a true representation on the security market necessarily. So I said, well, let's go out and research the top security companies in the public market. Right, we had some good IPOs last year with Tenable and Carbon Black. We've had public companies already out there. So let's go through a list and see who's out there. And what I ended up creating was a list of 25 security companies. So IBM's not on this list. Mm-hmm. Cisco is not on this list. Synopsys is not on this list because I don't consider them pure play security companies, Paul. Mm-hmm. I wanted pure plays. And so I came up with the top 25.
Raytheon, I mean, even ServiceNow, Raytheon, in some of those type BlackBerry, like they're not straight security plays. Yeah.
Exactly. And so I didn't want to mix a technology provider who also has a security practice. I wanted to focus just on the security pure plays. And so that's what I created called the Security Weekly 25.
Right.
It's the top 25 pure play security companies. I wanted to set a threshold a little bit, said they should really be $1 billion market cap or higher. There are a couple of them that are currently under that range, but they have been
So Matt,
$1 billion market cap.
So explain market cap. What does that number represent for our audience?
Yeah, so market cap is based on your stock price and your outstanding shares. What does the market value you at as a capitalization? So basically you take stock price times outstanding shares and you come up with a number. I said anybody that's really under that $1 billion threshold, probably too small to track. And there are a few security companies that are public under that $1 billion market capitalization.
Sure.
Most are like right at it or above it. And so I focused on those to create this initial 25 list.
Awesome. That's great.
Yeah. So let me give you some.
Some of the companies that are on there. I mean, so if I think of public security companies, I think FireEye, right, would be on that list.
On the list.
Tenable, as we track very closely, Tenable, Qualys, and Rapid7, their market cap, those three companies, similar market cap, right?
Yeah, they're all over $1 billion, kind of between $1 billion and $3 billion between the three of them. But yeah, they're all over $1 billion.
That's all I got off the top of my head right now.
Oh, you got VeriSign, Palo Alto, Checkpoint, Splunk, Symantec, Fortinet, Akamai. I mean, these are big security companies, and so they make up a portion of that portfolio. Carbon Black is on the list, even though they do fall under the $1 billion market cap threshold right now because the market's a little suppressed. I kept them on the list.
Yep.
But those are the types of companies that I tracked. And so then what I did is I said, okay, I've got these 25 security companies. I want to track them on an ongoing basis. So let's create an index similar to the Nasdaq or the S&P 500 or the Dow Jones Industrial Average so that we can track and trend these companies over time. And then I can compare that to the Nasdaq or to other sectors if we want to later. And there's a couple different approaches to create an index. There's a price-based index, which is based on stock price, or there's a market cap index, which is what I used, which is similar to what the S&P and the Nasdaq do. They use a market cap versus a price weighted index to create a standard starting price. So for all those who want the details a little bit, I took the closing price of those 25 stocks on December 31st of last year. And I baselined their market caps based on that date. And I said, I want the index to start at 1,000. And that gives me a baseline now that I can start to compare against. As those stocks move and change on a daily basis, we can now see the change to the index. Is it going up? Is it going down? And now we have a comparative. And so that's kind of how I created the base index, Paul.
Yeah, and
then what
I think
I did,
it's awesome that the 25 stocks you chose versus the Nasdaq, Matt. I mean, it follows it very closely. If you put those, if you go to wiki.securityweekly.com, episode 113 for Business Security Weekly, I mean, it's basically the stocks are following the 25 you chose are following the Nasdaq pretty closely.
Pretty closely. They vary at different times. Like I said, I wanted to really understand how the security index does or doesn't track with the Nasdaq. They're slightly different for this year. And I went back in time. So to create that graph, Paul, I went back as far as I could, and I could only go back to July 25th. And July 25th is when Tenable went public.
Yeah.
So that's the furthest I can go back because they're on the top 25 list. And I put together a couple graphs for the audience to take a look at to see where the index going back in history up through Friday, what does it look like? And then I did that and overlaid the NASDAQ index on top of that. So you can see it does track the NASDAQ pretty closely, which we would expect.
Sure.
But for the year, it's actually higher than the NASDAQ, which I thought was a little interesting, right? Is that the security index is sitting at a gain of 5.62% through Friday, where the NASDAQ is only up 5.07%. So this security index is actually performing a little better than the Nasdaq from, a few weeks into 2019 anyways.
And that's there are so many factors that can affect stock price and or market cap, and that's why people who do this for a living are really rich, right? And we analyze the security market, but not necessarily as closely. And from an investment portfolio standpoint, Matt, you want to be very diversified and not, because I think there's a lot of us that work in security that are like, oh, I know which companies are doing well, which ones aren't. But you got to be a lot more diversified into different industries and different types of trade in investments.
Absolutely. I mean, I don't think I would fully invest in this Security Weekly 25 list because there's certain companies on there I probably wouldn't invest in as part of my portfolio. I would look at other staple stocks, for example. But this gives us a really good way to track our industry and understand how is our industry moving and changing. So that was the basis behind the Security Weekly 25, come up with those top 25 companies. Then I went a little further. I said, okay, now that I have that, let's go back and look at performance across that sector, because now we have a set of 25 stocks we can go look at and compare. Now I can see what earnings season looks like. Is it good, bad, indifferent, etc.? So what I did is I went back through all the Q4 earnings reports that were really reporting on Q3 2018 earnings. So typically, company, goes through September. Sometime in October, November, December, they report their earnings for the previous quarter. So I took all that data that I had for my top 25 and I put that all into a spreadsheet. And I said, okay, so how did we perform in Q3 of 2018? And this will give us something quarterly, again, to compare against to see how our industry is tracking. And the good news is we had a revenue beat on average at 2.46% in Q3, which means the amount of revenue the street, Wall Street, expected the security companies to do, we beat that revenue forecast by 2.46% on average. So that's good. That was a good quarter for the stock portfolio. But what was even better was our earnings beat. A lot of the stocks in this portfolio are still not profitable, at least on an annualized basis. Companies typically come out with negative earnings, typically 12 to 18 months, you're trying to get to positive earnings. So we've had some good startups over the past couple years. They're still transitioning from negative earnings to positive. But overall, earnings beat by 23.43% on average in Q3 of 2018, which means our companies in the security space are moving their earnings in the right direction. And a 23% beat on average is actually really, really good for earnings, which I thought was great. I also looked at all the analyst ratings across all the stocks. 24 of the 25 are covered by analysts. Only one stock, believe it or not, Tenable, does not have any analyst ratings associated with it yet. But the average across all the average analysts is a buy signal. It averages out to 1.466%. So 1.5 and below is a buy. 1 is a strong buy. So we're sitting at a buy signal across, which is good. The best performer in Q3 was SailPoint. They crushed it both on the revenue and the earnings side. The worst performer was actually Sophos. Sophos has pulled back a little bit based on some of that news. They were the worst performer in that segment. So just a good kind of summary of how the public security companies did in Q3 2018.
And again, there's a lot of factors that go into that, Matt. What are some of those factors that are affecting some of these stock prices?
Yeah, so typically what happens when a company goes public, you start to have investment bankers and hedge funds and other investment vehicles start to look at these stocks, and they decide whether they want to invest. And based on that investment, analysts will start to cover the stock, and they will start to put forecasts together on a quarterly basis. We'll talk about a story in the next segment about how much average time a CEO spends educating Wall Street. It's about 20% actually.
Interesting.
And so what the analysts are doing is they're listening to the companies. They're looking at the market conditions, and they're coming up with estimates on where they believe their revenue and their earnings will be for a given quarter. Then at the end of the quarter, companies do typically a press release and an analyst call, and they actually give them the actual results. And so it's based on a lot of different factors. There is no pure science to this, but the analysts are looking at a lot of different data points to say, we think you're going to make this much revenue this quarter. This is what we think your earnings will be. You get a consensus across a number of analysts, and then you report and you're like, okay, did we do better or we did worse? If you did better, the stock typically goes up. If you did worse, the stock typically goes down in the case of Sophos, right? And so that's what you kind of see. And those are some of the ways this kind of, comes to be on a quarterly basis.
That's cool. Yeah, I thought it was interesting that when companies are looking for funding, the founders and the CEO will spend a lot of time with investors and potential investors. Once the company goes public, that job doesn't go away. Now you're educating the market analysts.
Yeah, exactly. You have to continue to keep the analyst apprised on what's going on, because as a public company, you want to meet or beat the analysts' expectations, which requires a lot of communication with those analysts to make sure that those earnings estimates are accurate. So when you report, you meet or exceed, because your stock price goes up. Because a miss there really means, trouble for the stock, and that's when you see, the stock go down, which no CEO wants to see the stock go down.
I gotcha. That's really awesome.
Yeah. So the last thing I wanted to cover just quickly on the public market was, are there any planned IPOs for Q1? We know there's rumors about Tanium and CrowdStrike, but no one's done an official S1 filing. So I'm not sure that we'll see any.
Is that because of the government shutdown though, Matt? Is the SEC not processing applications?
I think it's a combination of a couple things. I think there are a couple security companies that want to go public this year. And if I'm the CEO and the CFO, and I'm looking at the end of the year last year, trying to decide when I go, and December was rocky. It was a rocky market for anybody who tracks the stock market. December was rough. We go into a government shutdown, uncertainty about interest rates, uncertainty about trade with China. I just don't think those companies are willing to take the risk of an IPO this quarter currently. What we hope to see, is a resolution to the shutdown, some resolution to trade with China. And it sounds like the Fed's going to back off on at least 3 interest rate hikes. We might get 2 this year, but that should take a little pressure off, which probably puts the market in a better position Q2 and beyond for some of these security companies that want to come out. So I think we have to see how the rest of this month, maybe February, goes before we see some of those S1 filings. But I don't think it's specific to the shutdown. I just think it's market conditions aren't prime.
Gotcha.
All right. So that's the public side of the house. So that's something, I'll keep track on, and we'll report on quarterly to the audience. The other side of this then is the private companies. What's going on in the funding world? As a few of you know, I spent a lot of time working with a couple of these companies that I'm about to mention, both in acquisitions and in funding last year. And so it's a very interesting space for me to continue to track. I think it's good for our audience just to kind of get a feel for what's happening with startups and how funding's going. So again, I break this down. I'm breaking this down by month in Q4. I'm going to pull some more statistics over time on this just to see how we're doing in overall on the funding side. But Q4 was a pretty good funding month. December, I don't have the final numbers on December. But if you look at October, there were 32 funding transactions for $672 million. The median raise was $9 million. That's a really good solid A. Couple big ones in October. Tanium took $200 million. That was a huge round. I think they're like in D or E round. Again, getting ready to go public. Took another infusion of cash to get them, I think, to that IPO timeline. The other one here was Arctic Wolf, took $45 million in October. That's a really big round. That was also a slightly later round. It was not an early round.
Yeah, I saw those.
Yeah. November, 37 transactions for $557 million. So we saw the transaction numbers go up, but the total dollar come down. Still, the median was $8 million, which was a really good solid A round. Netscope was the biggest one, the 169 million for Netscope. Venafi took 100 million, and then CyberGRX, who I know very well, the guys over there, they're Denver-based, they took 30 million in November. So those were some of the big rounds in November. And December is where I don't have all the numbers yet. It's still kind of early with the holidays. Yeah. Some of these numbers lagged a bit, but one of the big ones in December was Automox, which I still advise, and I think
proud sponsor of the show.
Yes. Yep, sponsoring Q2. So Automox took $9.5 million. That was their Series A in December, which was fantastic for the team. That Boulder team is going to continue to grow. So some good funding news there in Q4.
Awesome.
Acquisitions, again, a really good indication of how the market's doing. October had 18 deals worth $2.5 billion. The biggest one was Imperva by Thoma Bravo. Imperva put a little hitch into my Security Weekly 25 because they were originally in the 25, but they stopped trading on January 10th because of this acquisition. So I had to remove them from the 25 because they are now privately held by Thoma Bravo. But that was the big one in October. Dome 9 got acquired by Checkpoint for $175 million. Redlock was acquired by Palo Alto for $173 million. Layered Insight got acquired by Qualys also in October. That was another big announcement. That's what got me here because of that acquisition. So that was a really good October. December had 14 deals at the same $2.5 billion. And the big one there was Cylance by BlackBerry. That was a $1.4 billion acquisition. That one has not fully closed yet, I don't think. I think they're getting close. So that deal will close here soon. The Veracode by Thoma Bravo, that was a very interesting spin out from Computer Associates after the Broadcom acquisition. Thoma Bravo spun them out from CA, taking them back private. So Veracode is its own company again. And I think that's only been...
I wanted to clarify that, Matt. The acquisitions are different. So Layered Insight is an example, purchased by Qualys. Even an outsider looking in, you could say, well, Layered Insight had this technology, Qualys has this technology. Well, that's, that makes sense. I can see where that's going. Thoma Bravo, though, when they acquire companies, they tend to operate independently as a wholly owned subsidiary more so than... So is it the difference between a merger and an acquisition, or not really? It's still an acquisition. It's just the end result is very different. I think that's important for this audience of this show to understand. If you're a Layered Insight customer and they get bought by Qualys versus if you're a Veracode customer and they get bought by Thoma Bravo.
Yeah, I think in the case of Layered Insight, that is technology that fits into a broader Qualys portfolio.
Right.
And that was a pretty strategic acquisition by Qualys to improve their container security as part of their application security, as part of their overall portfolio. And that means Layered Insight customers will get integrated into a much larger company that they may or may not be doing business with, but gives them a lot more capabilities. In the case of Veracode and Thoma Bravo, it's really interesting because, Veracode was a standalone company for a number of years, was acquired by CA, integrated into a broader CA portfolio. So kind of like Layered Insight, right? Veracode comes in to an application security portfolio by CA. CA is building out its application portfolio. CA gets acquired by Broadcom. And the question is, does Veracode make sense in the Broadcom CA portfolio? And in this particular case, there must have been some recognition that maybe Veracode wasn't best structured under this new combined Broadcom CA umbrella. Therefore, let's take that investment that we made year and a half ago by CA, spin it back out. Thoma Bravo says, yeah, we'll take that thing back out, make it private, build it up. Thoma Bravo could do a couple things with this, Paul. So Veracode customers still get Veracode as Veracode, but now Thoma Bravo could do some interesting things with Veracode. They could take Veracode public if they wanted to, or they could combine Veracode with other portfolio companies and either run it as a new consolidated company or take that consolidated company and take it to the public market. So Thoma Bravo has some different options that they could do. And Thoma Bravo has been buying up a bunch of security companies so you don't know.
Right. No, it's
which
interesting.
would be, yeah. Last acquisition in November was the Security Matters acquisition by Forescout. And again, anybody who tracks the industrial control system, Security Matters was kind of one of those four or five vendors I talked about in the industrial control system space. Forescout's been talking about industrial control systems. They
For a while,
actually made
yeah.
an acquisition.
I mean, years ago they changed their messaging significantly to focus on IoT, which I had traditionally had them as a NAC vendor. There is a play there, don't get me wrong, but now if you're gonna really go all in, you got to be involved in industrial controls, where a lot of the, I think, commercialization on more of an enterprise, and it's not even an enterprise, right? They're industrial entities that require those services. So I thought it was an interesting move for Forescout. I think really pushing them in that IoT and ICS route for sure.
Yeah, exactly. It kind of filled their message in the IoT, industrial control system side. They needed some of that expertise. They acquire Security Matters for $133 million. That's good for the other ICS vendors, I think. That's a pretty good acquisition price there. December had very little data. Again, December is kind of slow with the holidays. Sienna Group, which is a managed service provider, acquired ConnectWise, which was a managed security service provider. I think you'll see some of these trends as well, Paul, is bringing security capabilities into the traditional managed service providers to offer managed security services. Not a big acquisition. I couldn't find the price tag on this one, but that was really the only acquisition activity in December as we kind of rolled into the holidays.
Yeah, and I think we'll continue to see consolidation in the MSP and MSSP market, as we have in the past. Of course, was it Fishnet and Accuvant, right?
Yep.
That merged to create Optiv.
Correct. Yeah. And they both had very different offerings, and now they have a consolidated offering, which is good. But Optiv is also a huge reseller of security technologies, and so was Fishnet. So that created one of the largest value-added resellers in the security space out there. Yeah. All right, last topic on our security money segment. I just wanted to note some hot startups in the space. Paul and I see a lot of companies come across our desk. We do, Paul does a ton of briefings. We see companies coming in and out all the time. And so I thought it would be interesting on who did we see last quarter that are very interesting startups, could potentially be sponsors on the program. Definitely companies we're tracking because they have some interesting technology. So just wanted to get a shout out to a few of these that we've seen. Cloud Needy, very interesting company in what we call the continuous cloud assurance market. Think of them as Evident.io for Azure with the ability to go multi-cloud. I think we saw a lot of security and configuration for cloud environments, very focused on AWS, which was Evident.io's space. There was a gap on doing some of that same security and compliance configuration checking in Azure and Google Cloud Platform. Cloud Needy's really focused initially on Azure for those enterprise accounts moving to Azure. We'll probably do some cross-platform stuff with the Evident.io acquisition. It creates a little more space there in the traditional AWS space. Very interesting vendor. Paul, you love Pixum,
I do.
the spear phishing protection company. You want to give everybody a quick overview on Pixum?
Yeah, and the briefing was some time ago, but I thought their technology was awesome. And I think they were the one, Matt, that basically took the tactic of phishing doesn't always come through email. And I thought that point of view was absolutely fantastic, that it basically, end result is it happens largely in your browser. And if people are sending you links, that could come from anywhere. And their protection basically lives after the user gets the link and clicks on it. And I thought that was really smart. I saw a demo and it was spot on technology. So,
agreed. And then the last one we saw was SecFence, which is this new multi-factor authentication company trying to deal with some of the MFA requirements around cloud environments and applications. Again, I think we're going to continue to see some movement in the identity access space. MFA, very interesting space, but now we're talking about new environments where multi-factor authentication needs to kick in. SecFence is one of those interesting companies that we saw last quarter.
Love the people there, and I love their again, their point of view, which is basically making it easier to apply multi-factor authentication, which I think is going to continue to be one of the things that holds back that particular subsection of the market. But with SecFence's mission of making it easier, it's going to help increase adoption. And those are a couple of reasons why I like SecFence a lot.
Yes. All right, so that ends this segment. If anyone wants more details on the Security Weekly 25 Index or about my analysis, please feel free to email me at bsw, Bravo Sierra Whiskey at securityweekly.net. We'll take a quick break, then cover the leadership and communication articles for this week.